we're going to go ahead and get started. Again, my name is Tony Kappert. Welcome to today's webinar. We're going to be talking with Nic Anderson, who I'll introduce in a second. But the goal of today's webinar is to really walk through the nuts and bolts of, if you're a searcher looking to buy a business, in particular, acquire a professional services company, what should you look for? And it's going to be a really tactical session. Nic actually acquired a professional services business and has been operating it for the last 5 years. And so is exactly the type of person that I think we all could learn a ton from. And I'm excited to dig in. So before we get started, just a little housekeeping piece. Because of the volume of folks who are on the webinar, we're not going to be taking questions live, but if like live verbally. But if you do have questions, just drop them in the chat, or use the chat tool within Zoom. And as I get those questions in, I'll be bringing them up where relevant in the conversation and addressing them. And of course, if we don't get to one of the questions that come in, you can always just shoot me an email afterwards, and I can, or shoot Nic an email, and we can go from there. So let's dig in. So first, again, some quick background on me. My name is Tony. In a previous life, I built and sold a venture-backed SaaS company, Contactually. So we built SaaS CRM software for realtors and for brokerages. Sold that a couple of years ago to Compass, and I still, at Compass, drive a lot of our lead gen and marketing. But in addition, I really got pretty involved with the search community. In particular, I love investing in self-funded search deals, and I put together a small fund, Bloom Able, to do that. So we're doing about 10 deals a year. And I'm an operator at my core, and I love working with searchers who, frankly, are good operators. So if you're looking to do a transaction, looking to meet other self-funded search investors, would love to chat. Anyway, let me kick it over to Nic, who's on the call. Nic, you want to give a little bit of background on yourself?
Yeah, sure. I was a searcher that came out of Harvard Business School. I started my search basically the day after graduation. I decided to go self-funded and searched nationwide, pretty industry agnostic. And after 2.5 years search, closed on a company in Sacramento, California, that provides digital forensics and other services to law firms. I've been running it ever since.
That's cool. Well, Nic, I'm really excited to dig in with you, and thanks again for doing this. We've done a handful of these webinars in different industries so far, and I think just for whatever reason, folks who I've talked to, they've been operating their business for a year, 2 years. The fact that you acquired the business back in 2015, it's been, because I was saying 5 years, like 6+ years, is just really it's really cool. I think to see that arc on maybe what you anticipated 5-6 years ago, and how things have changed. I'm really looking forward to digging in. So thanks again for joining.
Thanks for having me.
And just a reminder again, I alluded to it earlier, but this is a series. So we've done a handful in different industries. About every couple of weeks, we do another one after did a brief hiatus over the summer. So in a couple weeks, we're going to have my friend Nick Hashka on talking about what to look for when acquiring in landscaping. And then we'll do another one specifically focused on government contracting and professional services with another friend, Jordan Carter. So those are the two scheduled for October, and we'll continue to do more through this year and into next year. So if you want to keep getting these, good news, if you're watching this live or you're listening to the recording, you're already on the list. So you'll keep getting invited. Anybody else who wants to be invited, just shoot an email to webinars@bloomable.co, and we'll add you to the list. So without further ado, let's dig in. This is what we're going to cover today. Essentially, why this industry is a good focus, why a lot of searchers focus within the professional services world, and why Nic dove in here. And then we'll spend really the bulk of our time talking through, what are the metrics or the things you should look at when assessing good versus great companies or investments, where to spend time when you're doing the diligence and trying to figure out where to acquire, and then some lessons learned that Nic has had along the way. So on that, Nic, I'll turn it over to you. You want to just give just a quick summary on the business when you first bought it, and then how things are looking today?
Yeah, sure. So as I mentioned, we acquired this business in 2015. And at the time, it was the service mix was a combination of paper discovery and then digital oriented discovery services for law firms. And so our investment thesis was, okay, the paper discovery business probably doesn't have a bright future, but it's
Yeah,
cranking out
sideways at
cash.
best, probably going down over
Yeah,
time. Yeah,
exactly. But what we felt was that it was going to have a long tail to that industry, and the legal industry, which is our downstream market, doesn't change quickly. And
sure.
so we felt like that would be a great platform that would generate cash for the much faster growing digital side of the business, where we thought there was a really big opportunity. And I think that we were able to get in at a multiple that would have been difficult if there weren't that combination of factors there. It just made it less attractive to an acquirer who was thinking about the digital forensics opportunity, because it superficially looked like a paper business.
Sure. I guess digging into that point, what was the sales growth, the CAGR over the previous 5 years when you bought the business overall, and I guess specifically the digital part as well?
Oof, you're asking tough questions, Tony. You gotta remember a long time ago.
Roughly, right? I mean, I think it's impressive that you've done, especially.
I mean, it was
since.
definitely growing. You know, it was a growing business, and in fact, both parts of the business were growing. The digital side of it was growing faster, but both sides were growing. And at the time, we spent a lot of time and a lot of hand wringing over the paper piece of it, and what that future was going to look like. But you know, the research that we did convinced us that that was a market that actually still had a little more growth left in it. So, you know, it's probably growing at around 10% a year overall. Sure. Prior to the transaction.
And was the thesis moving forward that, look, we're definitely going to double down on the digital piece, we're going to grow that more aggressively, while we assume the non-digital piece is going to taper over time? Is that fair assessment?
That was the idea, exactly.
Yeah. And at the time, I know a lot of folks are often ask, you know, how did you think about the purchase price multiple? You know, 6 years ago, I would guess, as someone who's relatively new to the search world, multiples seem to be creeping up as there's a lot more competition. You know, small PE shops are moving down market. There's a lot more searchers, just putting that pressure on purchase price. But 4.25 feels like, you know, I've seen a lot of 4 to 5x today. Was that like is it an average multiple? Would say that? You think it was a particularly great price? How did you guys think about the purchase multiple?
Yeah, I think it was a good price. I will say that our approach tended to focus on the lower end of sexiness in terms of industries and businesses. And, sure. and this was towards the high end of the types of things that we were looking at in terms of the attractiveness that it would have to a typical buyer, right? It didn't take much to see that the growth prospects in digital services to law firms were likely going to be pretty positive. And so I do think that we probably came up a little bit more on the multiple as a result than in other deals that we looked at during our search. But we felt like the growth opportunity was probably more significant than other deals that we looked at in our search.
Sure.
So overall, I think that we came out to a pretty good place.
And I assume you guys weren't exclusively targeting professional services, that you probably have more of an industry agnostic approach. Is that true?
Yeah. Our goal in our search was to cast as wide a net as possible. I had a partner, so we had plenty of bandwidth to evaluate opportunities. And so we just wanted to see everything.
So and I'm putting the cart before the horse a little bit. I think you probably have a slide dedicated to this, but why did you ultimately double down in this industry or this business versus others? What really stood out?
Well, you know, I do think that relative to the industry segment and the growth prospects, we were able to negotiate a good purchase price. And so that was exciting to me. I think that if we had been just trying to find digital forensics businesses, it would have been very difficult for us to find one at this kind of a multiple. And I think that we were able to do that in part because it was just a little confusing to understand because of the different lines of business that they had. The other thing that we liked about it, and like you said, I think we'll get into this on another slide as well, but it was a good fit for us as operators. You know, we really understood the downstream market, right? The client base of attorneys was something that we felt like we could really understand, given our professional backgrounds and kind of professional networks and things like that. We actually felt like we could probably understand that market better than the previous owners. Even though they had been in the business for a long time, they knew their operations very well. We felt like we would bring a lot to the table with respect to understanding the downstream market. And then also, operating a professional services business requires a particular management style that's very different from that of many other industries, and in my experience, different from most small business owners' style of management. And so that was another thing that we felt like, okay, we're bringing some unique value to the table here that's going to make this a good fit for us as operators.
Sure. I want to park that second point for maybe a little bit down the road as to dig into in more depth. But I guess on the thinking about where you could sort of resonate or maybe connect more closely with the target, right, customer, right, with lawyers. I'd love to dig a little bit more into that. One of the things that I often see a lot of searchers, I don't know if I'd be so bold as to call it a mistake, but I think a lot of people approach their search with kind of a spreadsheet math view, right? We're sort of like industry agnostic, location agnostic. We're going to go where the best opportunities are. And I think that makes sense to start that way on the one hand. But on the other hand, I think a lot of businesses, given the type of employees and the team that you end up working with and the customers you end up selling to, can be really challenging to transition from, most of us probably worked in white collar professions before, or went to college, and then working with folks who are, in the warehouse and selling to people who are just very different from you. I think people underestimate the difficulty of that transition. It sounds like you guys gave that some thought, and that was part of the reason to double down in legal. But yeah, I would just love more of your thinking on that, or any advice you'd have for searchers who are thinking about industries in which to focus.
Yeah, I think that's a really big factor. And one thing that I'll say is, it's hard to separate the perspective I have now from the perspective that I had then. And so I probably can describe things with a clarity that I definitely didn't have at that time.
Yeah, sure.
So I don't want it to seem like, I had this all figured out at that time. But definitely I was concerned about what you described, which is that, not every client base and not every employee base is the same, and not all of them are going to respond to the same management style or the same approach from a sales and marketing standpoint and things like that. And I think it is risky to, people focus a lot on the business. Can I understand the business? I want a business that I can understand. I think people underestimate in some instances the downstream market. Can you understand your client? Is their business something that you can understand? And in some cases, the answer may be, yeah, the business itself is very simple, but it requires a really in-depth understanding of the client market that you're selling into, that you may not have and may not be able to develop for a long time, or it requires a style that you're just not going to have because of your background. As you mentioned, if you came from Wall Street and then you went to business school and then you came out and you decided you should be a CEO, there's a lot of groups of people that doesn't click with them, and that's not really what they're looking for in a supplier or in a partner or in a employer.
Your thoughts on how to mitigate that risk as a searcher in terms of understanding, is this a business in which I am going to be able to understand the customer segment, or you're potentially going to step into, an area that will make it far more difficult for you to run the business versus the previous owner? I feel like I'm asking a really nebulous or difficult question, but I'd love any, specific advice you have there.
Well, the big thing that I would highlight, which again, I think can often be underestimated, is middle management.
Yeah.
And I know in our search, and most of the people I talk to, a lot of time gets spent on trying to understand the owners. How are they operating things? What is their motivation? All of these things about the very top level, and not as much time spent thinking about the next level down. And especially if you're getting into a business where you're not going to be the one who has that perfect rapport with the employees or with the clients, you're going to be leaning on that middle management team so heavily. And,
Totally.
we took that seriously. We spent a lot of time looking at middle management, but we should have spent more time and effort, and we could have done a better job on that. Frankly, it ended up that we did a very poor job on that. And that ended up really kind of biting us down the road. And so if I were to do it all over again, that's a place that I really would focus on further in the diligence process, is spending a lot of time talking to those people who you're going to be completely reliant on, especially in the first couple of years.
Totally. Let's pick that up when we talk good versus great, and maybe how to assess that more at a good versus great company through the middle management lens. But before we leave this slide, I do want to talk just a little bit about the business today. Sounds like clearly the digital part of the business has grown exceptionally, double the growth of where it was before. You touched on the other parts of the business have had mixed results. It sounds like you anticipated some of that, right? The paper business. Anything particularly surprising that you think maybe would extrapolate to other types of deals like this, or I don't know, anything particularly surprising that you can elaborate on?
Yeah, well, I guess, we experienced two major challenges, one of which is potentially instructive, one is probably not so much. The first one was we ran into a lot of revenue problems right at the beginning of the process, which, with the benefit of hindsight, we diagnosed as the result of inattention during the transaction process. And so this is something that I think most people are aware of. You hear it from more experienced operators or searchers, but I know we didn't focus on it as much as we should have, which is that you have sellers who are running the business and they're going through the M&A process probably for the first time. And that's an extremely burdensome process. It's a stressful process. It consumes all of their mind share.
Sure.
And so they're taking their eye off the ball with respect to the business. And in some businesses, you notice that right away, and you'll see, okay, we're starting to see revenue softening, and it's because they're not as engaged in the business right now. In some businesses, depending on kind of your lead time, you might not see the consequences of that until 6 to 12 months down the road. And that was the case with us. We suddenly got ourselves into this situation that had started probably 6 months before we actually purchased the business. And you add to that a ramp period of the new management team where you don't know what you're doing, and you can find yourself in a really challenging situation. And with those long lead times, it can take a while to get out of that situation. So that was one piece of it that we experienced in particular on the paper side, that those long lead times, we didn't anticipate the impacts that things that happened prior to the transaction we're going to have. Then
before we go into the other point, what would you have done differently if you could have better assessed that? Is it just better understanding the forward-looking pipeline or the customer health while you're going through the transaction? Would that have mitigated some of that risk, you think?
I think the first thing that I would do is I would think about managing the seller. So, in some sense, as soon as you sign an LOI, you are in a way kind of an owner of that business. Obviously not in any legal sense, but in some, there are many futures in which you are going to be the beneficiary or bear the consequences of whatever is happening during that transaction process.
Sure.
And so although you don't have any direct authority to manage the business, you still kind of have a responsibility to manage that business. And we didn't do very much of that. And if I were to do it again, I would be much more proactive about treating the business like it was my own business already, and saying, okay, hey, let's take a break from pulling accounting reports or whatever it is that we're doing right now. Let's talk about what you're doing today in the business, right? Are we on track? Like, how is this week going? All those kinds of things that you would do if you actually were managing the business. So I think that
make sure he's not allowing the trains to derail while he's going through this.
Yeah, you got to keep him focused.
Yep. That makes a ton of sense. I guess, and you were going to mention a second point that I cut
Well,
you
so
off.
the second experience that we had that was a challenge was the pandemic, and I don't really have any good advice for how to prepare for something like that, but
Sure.
that disproportionately impacted the paper side of the business, just because courts were closed and law firms were closed, and so anything that was getting done in the litigation process was being done digitally. So not really. I don't know if it's instructive, but it certainly is an example of the kind of stuff that you have to look forward to if you are in this process.
Totally. Yeah, I think I haven't heard someone yet call out that point about ensuring the business is staying on track, especially if it's hidden with like a longer term contract, or like the churn's not going to be evident for a while, 6-12 months. I think that is a really great point. It's almost like pulling up with the owner on, what's keeping you awake at night, or what's like red, green, yellow in the business. I think makes a ton of sense.
Yeah, I think maybe the way to think about it is, as soon as you get a signed LOI, you should at least think of yourself like a board member.
Yeah.
Right. You don't have any executive authority, but you do have the responsibility to make sure that the management team is doing what they need to be doing.
Totally. One question came in while we were chatting, and then we'll shift on, but how did you find this deal, and any particular insight you have maybe in what's unique, or a unique resource maybe one could utilize to source professional services deals?
Sure. So again, this was a while ago, and so not only do I have to kind of stretch my memory for this, but a lot of the tactics have changed since then. Just to give you a sense of how much the tactics have changed, our primary proprietary outreach method was letters, like pieces of paper that we mailed.
Even for a business selling to white collar teams, they weren't like, email wasn't going to be effective.
It probably would have been. I mean, there's other factors besides just whether or not the owner uses email, right? There's
what'll stand out.
Getting a look at but anyway, that's neither here nor there. The point is, the way that we found this was, I think initially we had found it as a proprietary transaction. We looked at it and it wasn't that interesting to us. It was a little too small, and the service mix wasn't that interesting. And then they did an acquisition during our search, and that made the company a little bit bigger, and that kind of put the paper and the digital side together. And so that second time around that we encountered them, they had a broker, and so it ended up being a brokered transaction when we closed.
Got it. Cool. Let's move on to the next slide. We touched on some of this already. This idea that you were comfortable with the sort of target customer base, but I wonder if there's anything in particular of what you think is particularly attractive about professional services beyond this idea of your, who you're selling to is maybe easier, and in fact, who's on the team is more of a white collar type of feel.
Yeah. Well, I think maybe I'll take a step back and question whether professional services in general makes for a very attractive search target. And I would say overall, probably not. I don't think it's the best area to fit the search model.
Unpack that. I'd love to know why.
Well, the challenge is that it's such a people business. And I think that the people is the hardest part of coming in as a searcher, stepping in as a first-time CEO, and taking over the management of an operation. If the business is reliant on processes, machines, contracts, those kinds of things you can get your arms around very easily. It's just, can you sit down, take the time to understand it, think about how it all fits together, and then make sure that keeps going the way that it's been going. People are just so much harder and so much more unpredictable. And so I actually think that it's relatively risky to step into that type of a business. And I'm not sure that we would have taken that risk if it was just that. And so I think that the balance between the two sides of the business when we initially acquired it, it created more upside on the digital side, which is the professional services business. But there was some risk mitigation on the paper side, which was more of a like production process driven type business.
That's interesting.
Yeah, I don't know that I would necessarily say as a general principle that professional services makes for a very good search target.
Yeah, it resonates. I guess I have two thoughts. One, shouldn't say every, but anyone that are coming to mind right now of people I've spoken with who have purchased businesses and places in deals I've invested in, the bottleneck for growth always seems to be people, because even if I think about a couple of deals I've recently been invested in, right? One was a telecom deal where putting up cable and lines and whatnot. Another was like a home healthcare or home care thing where we're working with folks in their homes and need to recruit people to work with the elderly or disabled people and whatnot. In both of those examples, I think this is true for a lot of industries. It's really difficult to recruit talented, reliable people. And while it's true the product itself is maybe not necessarily people, and you've got those other equipment as well, maybe less so in the home care, but certainly in the telecom deal, it still is a major bottleneck for them. So I don't know. It feels like it probably is a trend that exists in many industries, even though they feel like they're less people, right? You are obviously just selling people's time more so versus a product. What's your reaction to that? Does that resonate, or do you think professional services is still more unique in that sense?
Yeah, I think that there's some truth to that. I mean, the people element is the hardest part with any business, right? No matter what industry you go into, I think that the people piece of it is going to be the challenge. But I do think that there's a big difference in professional services in the sense that the value of the company is all in things that you can't actually buy.
Go make the people piece. You've got to recruit the people.
When you buy the company, you get the people if you negotiate the deal right, but you don't own the people.
Yeah.
And so, there's just an inherent risk in that transaction that's different from other industries, I think.
Yeah, that's a fair point. The other thing you touch on here, which I've heard many other folks who have run professional services organizations or have considered acquiring, particularly like a lot of consulting or type of businesses, is that by definition, because of what you're talking about, it's just people and their time. It tends to be fairly commoditized, and so unless you're like very tightly like niche focused in a specific sub industry, it's really difficult to drive predictable growth and predictable churn. And so I'd love your take on that. Do you agree? And thoughts on, does that just mean you should sort of ignore any potential deals that has a more generic or a more mixed customer base? Or is there some way to maybe mitigate this idea of acquiring a business that maybe is more commoditized, but there's still an opportunity to protect churn and growth? I'd love to hear your thoughts on that.
Yeah, so one of the variables I think that's important when we're talking about professional services is there's a spectrum of professional services, and I talk about this on a later slide, but the way that I think about it is basically leverage, right? How much leverage, and in this type of leverage, I'm referring to expertise leverage, right? What percentage of your work is done by really high expertise people versus lower expertise people?
Sure.
And so I think that depending on where you are in that spectrum, that the issues that we're discussing change a little bit. And so finding the right spot on that spectrum, I think, is important. And then the other consideration is barriers to entry. So you can have a professional services business that is relatively commoditized in the sense that it's mature, it's well defined, the clients know exactly what to expect, and the deliverables are similar across different providers. But I think there's still a lot of opportunity there, provided that there's some barriers to entry. So not everybody can do it. But there's a lot of people that are really successful in businesses that have very low barriers to entry as well. So it's one of the advantages about the search model is you're not operating in a very efficient segment of the market. And so I think just doing basic blocking and tackling, even in a relatively saturated market or one that's commoditized, can be very successful strategy, especially if you get your purchase price right. You have the appropriate amount of leverage.
Sure.
It really doesn't take too much to be pretty successful in a traditional search business.
I really want to dig in on that last point, but I guess in the interest of time, I want to continue moving on and shift gears. We did have another question come in around, it's kind of tied to the people piece we were just talking about, right? In a business where a lot of the folks in professional services, people, I would guess, have a lot of like client relationships, or the middle management probably has a lot of those client relationships. And clearly when the owner leaves, there's the risk, or when there's any transition, there's a risk that middle management leaves and takes those clients with them somewhere else. Anything, what did you guys do to try to mitigate that risk?
Yeah, so that comes back to, so first of all, it's a huge risk, definitely. And it's something to really be thinking about in any sort of professional services business, probably most businesses, but yeah, definitely professional services, because not only can a senior person walk out with your clients, they can also walk out with all your people. Exactly. And, they literally have just walked out with the entire business. So
I assume there's non-compete agreements for some period of time with the employment agreements, and maybe that's something to diligence, but
well, so that can be a complicated issue. I can tell you in California, for example,
yeah,
you can put a non-compete in place with the seller, but you can't put a non-compete in place with any of the employees. And so to the extent that the middle managers are the key to the whole thing, there's nothing you can do. I mean, there's very little that you can do to mitigate that. Right.
So what did you end up doing?
Non-competes are not very enforceable in California, right?
Yeah.
So usually you can get a pretty strong non-compete if it's as part of the sale of a business, but yeah, even that I wouldn't want to put it to the test. So yeah, that is a challenge. And so the solution, I think, or part of the solution, is focusing on the right part of the spectrum, like I described before. And so I described the spectrum in terms of leverage, how much of the work is being done by senior people versus junior people. So a higher leverage business is going to expose you to less of that risk, because a higher level leverage business is based around process. You get the efficiency by creating processes. The expert creates processes that then people with less expertise can follow. And so you retain those processes. That's one of the assets that you get as part of the acquisition of that business. And that's a little bit of an easier asset for you to own.
I love that. I think that just to be riff on that, make sure I totally understand. I think it's a bit counterintuitive. So what I'm hearing you say is leverage, meaning if you've got systems or maybe junior people relative to the senior people, and we're going to talk about that in the next slide, that's a better business for lots of reasons. From a comp perspective, it's just more efficient. But to your point, it mitigates the risk, because even if that senior person leaves, you've still got sort of the junior folks in the team, people who are executing in the processes left in place. To me, that's somewhat counterintuitive, because if you've got fewer and fewer senior people, like if any one of them leaves, it's a large percent of the senior people, right? It feels like it's very impactful. And so I on face value, if I said, oh, there's only 3 senior managers, like, and one leaves, we're really fucked. But I really like your sort of repositioning that, well, no, you've got the rest of the infrastructure. Am I understanding that right?
Yeah, I think that's exactly right. And it's a good point that it is a little bit counterintuitive. But yeah, I mean, I think that for a searcher who's coming in, doesn't have the industry expertise, I'd rather be on the higher leverage side of the spectrum, because it does make you much less dependent. So you're reliant on a smaller number of senior people, but you're less reliant on them.
Yeah, exactly.
Instead of being extremely reliant on maybe a larger number of senior people.
I think it's a good segue into, but it tends to be my favorite slide in a lot of these conversations, which is good versus great. You're talking about leverage. We just sort of explore it, but I think, yeah, I read this first point, to reiterate it, as, oh, well, clearly higher leverage is better because it's just more efficient, right? You've got lower cost resources doing more of the work. And so it's theoretically higher margin revenue, right? That's how I thought about it. But I'm hearing you say it's like, no, it's inherently a more valuable business because it is less reliant on the people per se, or the senior people at least, and more reliant on the infrastructure. It's more institutionalized, which I think that makes a ton of sense. Do you think that ratio, for what it's worth on the leverage, is that, I'm sure that you're speaking to some degree from your own experience of your own leverage ratio, but does that apply, you think, across different professional services pretty equally? And I don't know if no is probably the answer, but how should someone seek to use this and apply it to different types of professional services?
Yeah, so that's a good question. I thought about this when I was putting it together, and I wouldn't want to extrapolate too far, but I do think that it probably applies to professional services that are billable hour based. You know, even if they don't actually charge on a billable hour basis, if they have a billable hour mindset,
Yeah,
I think that these ratios probably hold up pretty well. Once you get outside of that, then I think there are some structural changes that probably make these numbers not very good for comparison.
sure. Would you, like, if someone's thinking about buying a business and it has a relatively low ratio, at what point, there's a conversation everybody asks themselves, which is, oh, that's one of the things we're going to do. We're going to make it more operationally efficient, and we're purposely going to shift that over time. At what point would you say, no, just like, don't even bother thinking this way, or it's a reasonable thing to think you can improve the ratio over time?
Well, I do think it's a reasonable thing to think that you can improve it. And in fact, I think that is a very good fit for the typical searcher in terms of a value creation opportunity, right? The average searcher is coming in with probably a more professional management approach than the average small business owner. And so that's a very good area to focus. I will say, I think it's a little bit risky for the reasons we've described, which is, if you can't make that jump before you lose those senior people, then you're going to have a little bit of a problem. And if you're going to lose those senior people, it's probably going to be in the first year or two when you're the most vulnerable.
Yeah.
And so it's risky, but I do think that is a true value creation opportunity. And we've seen it in our industry. It is very difficult for our competitors to move along that spectrum towards higher leverage, because it requires a completely different mindset than what gets you off the ground in the first place.
From a modeling perspective, whenever I'm looking at prospective deals and seeing how the searcher is thinking about driving the return for themselves and investors, I'm always asking myself, what are the assumptions that are rosier than I think they should be? In terms of driving the overall EBITDA growth in the business, what do you think is more realistic for professional services? That the top line revenue will grow at X%, or that the efficiency, the EBITDA margin improvement, will improve by X%? Where would you focus, and what do you think is more reasonable?
That's a tough question. I think that if I were looking at it from the perspective of an investor, and I just were taking the average searcher, I think that the improvement in the efficiency is a better fit for the typical skill set of an average searcher.
Is that the assumption being that they have more of an operator mindset versus like a sales mindset?
Yeah, I think that probably sums it up.
Cool. Utilization, I think, is pretty intuitive, right? You've got people, the more percent of their time is actually billable. It would make sense. You'd want that. What, any nuance to this? Like, I guess I'm thinking if you're, for example, acquiring a professional services business instead of the tax world, you have these extreme wild swings around tax season where utilization goes off the charts and it's probably relatively low in other parts of the year. And so, yeah, I'd love if you can riff on this for a bit and maybe how to think about, red lines around good versus great.
Yeah, so I do think it's pretty straightforward. So I don't know that there's necessarily anything beyond what is probably obvious to the people in this group, but I will say that it is an easy thing to put on a slide, and from an operational standpoint, actually evaluating this is very, very difficult, and it's difficult even for very sophisticated professional services firms. So firms that are much larger than what the typical searcher would be looking at still struggle with this metric. Everybody knows how critical it is, but from an operational standpoint, it's actually hard to extract that information from the business. So if I were looking at a business to acquire, I would really unpack whatever data I'm getting related to this and ask a lot of questions to make sure it represents what you think it represents, and it's measuring what you're expecting it to measure.
Sure. Do you think revenue, like business revenue divided by salary, do you think that's a rough, that to me will correlate tightly with utilization, right? And so I would assume that maybe that's a good like substitute. You're definitely going to be able to have, like, you'll have revenue divided by salary numbers from the very start. Do you think it's fair to just assume that if the revenue over salary number looks really good, that utilization probably is also really good?
Well, I don't think the numbers are quite as closely tied as you're saying, because utilization is a measure of efficiency and revenue over salary is a measure of margin.
Sure.
So they're closely related, definitely. And I would always want to see both of them. I think one or the other by itself doesn't actually tell you the full story. So for example, if somebody is at this 3-to-1 revenue to salary ratio, but they're 25% utilization, that's a huge opportunity. I would be really excited about that business because they're achieving, pretty good margins, despite the fact that
poor utilization,
superficially they seem underutilized. And you can imagine all different configurations of those two numbers. So together, I think they tell you a lot that you may not be able to see from each one independently.
Yeah, that's a good point. I sort of just assumed, right, that the margins would be relatively stable, and so as a result, in terms of what you could charge a client, and so as a result, high utilization would correlate tightly to revenue versus salary. But maybe it kind of flags another hypothetical I want to put to you. You let me know if this doesn't make sense or not. But what do you think is more appealing? A business where the utilization's high, but the margin or the revenue per salary is relatively low, or vice versa? What do you think would be more realistic that you could improve?
Yeah, so I would take the high revenue per salary and low utilization.
Low utilization, because you assume that with your operational efficiency, you can improve that over time.
The revenue to salary is, I think, more likely to reflect the industry dynamics, and to a certain extent, maybe the business model. Whereas utilization is just kind of an operational thing. You can get in, you can tinker with the business, you can fix that. The revenue per salary, there's going to be some parameters that are outside of your control.
Yeah, that's a fair point. Hence, and I assume you probably put these in order for that reason. Hence, by utilization, I think the takeaway I'm hearing from you is operational efficiency is really, really key in terms of what successful businesses look like in professional services, and between the leverage, which is a measure of efficiency, but also de-risks the idea that a senior person can take a big chunk of the IP, quote unquote, with them, and the utilization, like those are sort of tantamount to success here. Fair statement.
Yeah, I think that's true. I think the operational efficiency is an opportunity in professional services in large part because it's so frequently neglected.
Hmm.
There's two big things that, in my observation, professional services firms really do not like to think about, and that's sales and operational efficiency.
Yeah.
Both of them, I think, make the type of people that go into professional services, the experts, the professionals that work in those types of business, feel uncomfortable. Sales makes them feel slimy, like they're some sort
Yeah.
of used
Yeah.
car salesman, and operational efficiency makes them feel like widgets, right? And so when you show one of these professionals their utilization number and you say, okay, we're going to try and get you from 65% to 75%, that turns out to not be an easy conversation. Whereas if you show that to somebody, on a production floor or something like that, people get that. They're like, okay, yeah, I can get on board with that. Let's try and do that. It doesn't feel as personal to them.
Yeah.
And it doesn't feel as like they're a cog, maybe. I don't know, but that has been my observation. So that's where I think that's the low-hanging fruit.
You just brought up a point that I hadn't really thought much about, which is you as the manager or the new owner of the business are focused on these KPIs and trying to improve them over time. And I, in my previous businesses, have always been a huge believer in transparency and like sharing with frankly with the company, this is what we're trying to do. We're trying to move these metrics. But to your point, if the metrics inherently are going to be viewed as like, it makes them feel more like cogs in the machine, that might give me pause around how transparent I am with the team and how to best frankly communicate the goals of the business with the people who are doing the work. So is there, I guess my question here is, to what degree do you actually, are you this tactical or transparent with your team around these types of goals? And how do you communicate that to them in a way that's empowering and exciting that we're trying to grow this business versus feeling like, oh, well, you're trying to squeeze every dollar out of them?
Yeah, I think that's a great question. And I'm not sure I have the answer to it, but I would say that has been one of the biggest management challenges. And I think it's particularly pronounced for professional services firms. I can tell you that for the first probably 2 years at least, I did not even talk about any of this stuff to anybody on the team because it was too sensitive. And
Sure.
then I transitioned to, I would send individuals their, performance metrics. So the idea of like, we're going to look overall at our metrics that wasn't even on the table at that point. Now we've gotten to a place, either because I have gotten less cautious or because maybe I have built up some credibility over time. Now we can look at certain metrics together as a team and say, okay, where's our opportunities? Where are we encountering bottlenecks? How can we fix this? But it still is by far the number one thing that causes issues on our team. And that people are still extremely sensitive about that idea of trying to increase efficiency because, like you said, it gets perceived as just trying to squeeze every last dollar out of them.
Sure.
And so I'm still very careful about it.
Do you think you'd have, just spitball, I think my wife's an attorney, right? So this is very much a utilization world. When you're a partner and attorney, you make a percent of your billables, right? So you have 100% alignment to maximize utilization with the interest of the firm. Why not at least partially compensate the team based on their utilization or based on how many billables per year?
Yeah, that's something that we have discussed a lot, and we actually have tried it a few times. And I think that depending on the business and depending on the industry, that might work better or worse. I think that there are some professional services industries where people are drawn to it by the opportunity to make a lot of money. And so they tend to be more motivated by that.
Sure.
In our business in particular, that's not the case. People are interested in it because of their intellectual curiosity and their passion for that line of work. And I don't think anybody goes into it because they think, oh, I'm going to make a ton of money doing this. And so it ends up not being a very effective motivator to do that. If anything, it just amplifies this stress and anxiety around these metrics, and can sometimes make the problem worse.
For what it's worth, this is a total aside. The parallel that I would apply from the law firm world is there's typically two tracks of employees, right? There's partner track, which ultimately is going to have equity component, and it attracts people that really want that upside. And then there's the of counsel track, which are still senior people, but they do not make partner. They're of counsel, and they don't share in billables, right? And so you do provide those two tracks. I think in my mind, it seems like there probably is some segment in a given professional services company of people who truly are more coin driven and or want to share in the success of their own performance or the business's performance, where that could be a really interesting retention mechanism for those key people.
Yeah.
So as someone who's not operated a professional services business, I'll get off my soapbox and stop playing armchair quarterback. But I feel like a
no, I completely agree with it. We just still haven't quite figured out how to do it yet, but I conceptually agree.
And lastly, just not to go too deep, but realization. I didn't fully understand this last point. Can you unpack that?
So one of the things that I have observed in professional services is that there is way more wiggle room in how much you charge for your services than you would expect in other businesses, right? So like if you walk into a store, a clothing store or something like that, and you look at the price, that's the price you expect to pay, and you're going to pay that price, and you would never go up to the cashier and say, I just don't think this is really worth that price, and expect them to knock something off for you. But in professional services, that's very common. And I think part of it is because there's so little, the client doesn't have very much transparency into how that cost is being generated, right? You
Sure.
say, okay, it's this much per hour, and we'll tell you how many hours it is at the end, and then they get a bill. And so this is intended to measure for all of the work that your team does on your engagements, how much of it do you actually get paid for? And you can lose, there's different ways to measure realization. I'm using it more as a general concept, but you can lose things at multiple stages, right? So the first one, and potentially the most surprising, is you can lose it at the level of the professional. So professionals sometimes will choose not to bill for things because they don't want to charge the client for it. And so that's the first place that you lose it. And then you can lose it, in the invoice review process. And then you can lose it because the client comes back and says, no way, knock this off, knock this off, knock this off. And then you can lose it, because of just general credit issues, right? The client doesn't pay.
Sure.
So that's what this is intended to measure. I think it's a particularly important thing in my observation in professional services, because it's just less, the price is less tangible, and therefore tends to be treated more fluidly by both your people and by the client.
Totally. Yeah, it's maybe it's like an asterisk on the utilization rate. Like theoretically, that people can be spending a lot of billable time, but ultimately the billable time isn't actually, it's not being, for whatever reason, you're writing off the hours or the invoices aren't getting paid or whatever else, I think. But yeah, that makes a ton of sense. Let's, I know we've got 5 minutes left, and I know we've touched on a couple of these areas already, which is why I haven't, this is more of a conversation, obviously. Can you touch a little bit on the sales and marketing? So I've seen this firsthand, that professional services definitely, they're people who love their profession. They don't necessarily love the sales and marketing. And so what, from a diligence perspective, can you unpack what you meant by that point?
Yeah, so I think that the key idea here is the systems and the process. So if I see a business and it's a professional services business, and I ask them, how do they grow revenue? And they can't actually show me the specific process that they use, then I know that there's going to be a problem. And I know that they do what I've seen most professionals do, is they go out and try and shake the trees whenever things are slow. That's their process. And that's a very bad process. It makes you really reliant on a small number of people who are effective at that, or who already have the relationships. And it makes it very difficult for you to grow in any sort of scalable, systematic, and predictable way. So we didn't look into this nearly enough when we were doing diligence. And if I were doing it all over again, I would go really deep into that piece of it, right? Walk me through the process, show me, the communications, show me the system that you're tracking
Sure.
this in, and show me the numbers, right? What's your conversion rate at each step of this process? Now, I can guarantee you that for the vast majority of businesses that are in the size range that searchers are looking for, the answer is going to be, I have no idea. And so you just need to consider that as you're evaluating the price that you're willing to pay and the risk that you're taking on.
Well, so exactly the follow-up share, which is, let's just assume that in the vast majority of cases, they don't have these systems in place. So is that at what point do you don't proceed? Or like, I assume you sort of view that opportunistically as like, oh, we're going to implement the systems to make it more efficient. But how, I love the nuance of like how that translates into the go, no go decision, or how you could artfully translate that into downward pressure on price, because that both seem really difficult, in my opinion.
Yeah, I mean, it definitely is tough because they see that they are generating sales, and they don't see that it's not happening in a way that's replicable. So it is hard from a purchase price negotiation standpoint. But at the very least, it will allow you to come in with a clearer understanding of the risk, and knowledge of what you're going to have to start doing day one. Rather than saying, well, they're generating revenue now, let's just keep doing what they're doing, which is a very tempting thing to do, especially when you're coming from outside the industry, first time CEO in most cases. There's a lot of headwinds that will prevent you from making quick and major changes to how they're approaching sales and marketing.
Sure. Now, maybe that's the summary. It's like, this won't necessarily kill a deal, because it's assumed that this is going to be true everywhere, but it's more around what should you be attempting to do or learn upfront so you can mitigate future risk, in the not too distant future.
Yeah, I think that's true. I think it's a big risk that is not going to be visible in the financials in most cases.
Yeah. By the way, just 2 points. One, we're close to time. Do you have another like 5-10 minutes? Like we can keep riffing a little bit here.
I actually have a hard stop. Unfortunately, I have an interview.
Hard stop.
We are hiring like crazy, so I would jump on an interview right after this.
Well, no, totally cool. Well, let's maybe wrap here. I think the nice thing about these conversations is we touch on a lot of this sort of stuff throughout the conversation. So I'd love to end with just, if someone's considering professional services, what's the biggest takeaway, and how can folks reach you as well?
Yeah, so first of all, to the second question, I'm happy to talk to any searchers or prospective searchers or whoever is interested in this. That, as most people know, that's kind of how the community works. I talked to 1 million people when I was coming up, and happy to have those conversations, share my experience. So feel free to reach out, and happy to schedule a call.
Awesome.
In terms of the key takeaway from my experience, I think I would probably go with that last one. The question of how are you going to grow revenue is a really important question, and it's a very difficult one to motivate yourself to answer in sufficient detail when the company has already been growing. Right? You look at their historical performance, you're like, revenue is growing. So why am I going to agonize over that? I got all these things to worry about, right? I got to worry about raising capital. I got to worry about, all of these different features. Why worry about the thing that seems to be solved? And in my experience, that's a big mistake. And if I were doing it all over again, day one, the first thing I'd be thinking about is, how do I establish a systematic, process-driven, and predictable way to be generating revenue, which most small businesses don't have it, and professional services businesses of any size really struggle with this in particular.
Yeah, that makes a ton of sense. And I would guess that the churn is also a factor. So how are you retaining the clients? Right. Price churn is less of a factor, maybe in your world. And then how are we growing moving forward, assuming that churn is relatively low. But to that end, Nick, I know you got to hop. So thank you again for the conversation. I think each of these conversations I have with folks who acquired a business, I'm always just super impressed with the progress and the thinking. And, as you shared at the start, 5-6 years ago, you didn't know this world. And now, you truly are an expert. So I really appreciate you taking the time to chat with us and making yourself available to other searchers. So again, for the folks on the who sort of made it all the way through, again, thank you again for joining us. Nic, thank you for sharing your insight. And for those who are interested in more of these types of webinars, stay tuned for my follow-up email, or you can sign up for more at webinars@bluemaple.co. Thanks again, Nic. See you later.
Thanks, Tony. Thanks, everybody.
See ya.